And it would be great with volume. All right. Welcome, gang. Welcome to Charts and Coffee. Great to see everyone. All right. Happy Monday, gang. Happy Monday. We are off to a running start. Okay. Hope everyone had a good weekend. We're taking a look at what we have going on first thing here this morning. Let's open up this 5-minute chart just a little bit and we can see the strength that we have right now. Take a peek. NASDAQ is in an uptrend. S&P intraday is in an uptrend. We see some good strength since 7 a.m. All of the indices are actually heading higher intraday. And being above the previous session close, look, we can have uptrends and still be below Friday's close. So today we're above the close. We're moving higher. Why not? Why not move higher? We continue to see a higher expectation for rate cuts for September. Now, that's today. Tomorrow at 10 a.m. is day one of 2 days of what they used to call Humphrey Hawkins testimony. It's basically Jerome Powell is going to get peppered with questions starting at 10 a.m. From tomorrow, it's the Senate Banking Committee. And on Wednesday at 10 a.m. Eastern, it will be the House Financial Services Committee. So those are going to be 2 days where we are all going to be looking very closely at what is asked and how it's answered and how it maps to September cuts. Now, here's what's cool. You don't have to sit around reading what someone else has to say about what those two particular events, those two hot zones are doing. Just come on over to the CME FedWatch tool. You can just Google CME FedWatch and you'll get this link from the Chicago Mercantile Exchange. All right, what do we got? July 31 is a hold. There's nothing happening that Jerome Powell and company are going to be thinking about regarding rate cuts in July. So that's not really where the action is happening. The action is happening here. All right. And this is pulled back a little bit. This was sitting at a 72.5 on Friday. But look, 69% expectation of a rate cut, big deal. Now, why? A lot of folks say, Rog, why is it a big deal? Should the Fed cut? Shouldn't they have cut later? Shouldn't they? Doesn't matter what they should do. It only matters what they will do. Trade what you see, not what you think. So just look at the data and say, oh, that's the data. As long as we keep climbing towards 80%, once we hit 80, the Federal Reserve knows they've got to do one of two things. And it's just that simple. Either they got to cut the stinking rates on the meeting in September, or they have to have an organized member by member, Powell preferably, messaging that September might be a little too soon. Now, they won't say it like that. They'll make it sound as if they're not ready, and then September will adjust. But if they're okay with this, if they think we're going to cut rates in September based on the data we have in our plan and our models, they'll leave this alone. So it'll be really important to see at the end of Wednesday's testimony where this September expectation sits. November and December are firmly in the quarter point rate cut camp. That means by the time we get to December 18, we will likely already have seen a November 7 cut and we'll get a December 18 cut. But one of the things that we're doing in the Sector Secrets Mastery and the discussion that we're starting in the Top Tier Outlook newsletter is that expectations for rate cuts for this year are just for this year. But what about next year? I know it's only July, but hey, 6 months are over. We're thinking about the next 6 months. After December, we go into January, March, even April meetings. We are seeing based on the Fed Fund futures contracts that rates are going to continue to drop into Q1 of next year. So as we've been saying since Q3 of last year, when the Federal Reserve is in the process of preparing for rate cuts. And in the midst of the cuts, it is bullish. When does this stop? When the Federal Reserve starts to signal they're ready to pause, right? It doesn't mean rate cuts, or I shouldn't say rate hikes, rate cuts. It's not V behavior unless something dramatic happens. It's more of cut, 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 pause, hike, 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 pause, right? So when we get closer to the pause, well, then we're running out of that rate cut fuel. We're running out of that lower interest rate fuel. And that means that the market will do what? It'll start preparing for hikes, but we're nowhere near that, right? We're still in the beginning of this cycle because we haven't even started it yet. But the anticipation of it, as you can see, take a look at the year of the NASDAQ. My gosh, gang, this is what uptrends, and I don't mean straight uptrends from 2020. Please don't use that as an example of what uptrends are. Take a look at 2024. This is a very bullish year, or as we often say, all-time highs are never bearish. So please don't think we're going to hit an all-time high and then crash, whatever those expectations are out there. From time to time, I see people saying, Rob, we're going to go to 5,100, we're going to go to 5,300. Hey, cool. If that's what the crystal ball says, awesome. But I've been trading for over 30 years without one because they just don't work. I think it's Charlie Munger who has a great saying. The only thing you get with a crystal ball is a mouthful of broken glass. So we will trade what we see, not what we think. And what we see are higher highs in the S&P, NASDAQ this morning. Now, I'm not as bullish the Dow or the Russell because the individual sectors that are weighted in these indices are markedly different than what we're seeing in the NASDAQ and the S&P because those are being led by tech. So then the question comes up, but Rog, what about market breadth? Let me say it clearly. It just doesn't matter because the markets are not composed with needing broader participation. Of course, it's great. It's great when the high tide lifts all boats, but it doesn't have to, right? We look at the sectors that are heavily weighted in the averages and the individual stocks. Why do we call the Magnificent Seven the Magnificent Seven? Because they are the engine. They are the reason. And if other stocks choose to participate, great. They don't have to. Okay, so market breadth is by no means a reason to be, frankly, bearish because of the lack of, or really, let's say we have a lot of other stocks that are moving higher, but the Magnificent Seven or those high concentration weighted stocks aren't. That's not good, right? Because those stocks are largely going to be how the indices and the sectors are going to move. Please keep that in mind. And that's why we don't use market internals in the Sector Secrets Mastery Room. I don't give a rip what the tick is doing, what the trend is doing, what, I don't know, advanced decliner, especially advanced decliners. Who cares, right? I don't care what put call ratios are doing because they are not weighted in a way that reflects the Apple options are going to be way more important than even the last 100 stocks in the S&P 500. That's how high concentration works. All right. So with that being said, a little bit of summer school there. And it may not sound like things you hear, and that's okay. What I always tell everybody is test it, right? I've been talking about an uptrend all year, and I've been mapping to the data as to why. Trust it, right? The brain is going to doubt, and doubt is going to take away the beautiful indicators that you might be using or the analysis that you're using based on price, volume, volatility, and time. That's all that matters, right? Someone on television, yeah, they could move the market if their name is Powell, but he's changing expectations about macroeconomic expectations, which is whether or not rates go down in September. So if you want to decode why we're up, start with this. Start with that FedWatch tool. It just works. All right. So let's get to it. As always, if you have any questions, feel free to type them on in. And I think there was a question on Natty gas. All right. If you take a look at Natty, sure. By the way, crude's been moving higher. Natural gas is moving lower. All right. So what do we do with this? I don't want to buy natural gas. I prefer that natural gas move higher and crude oil move higher when I'm trading stocks in the XLE and XOP because of the weighting of Natty in certain companies, in especially XOP. It's going to be a little trickier. But if crude oil is moving higher, keep an eye on energy, XLE names, and oil services, OIH names. But for now, I'd leave natural gas alone. It's crossed down through the equator. It's in the bearish hemisphere. It is sitting on an anchored VWAP, which is probably about the only thing at this moment, plus the daily price movement range volatility support, that's going to kick in and either attract those bidders, right? Notice how this VWAP is, once we crossed it on the 3rd of May, we were able to start to climb. And then when we started climbing, we had to overcome the equator, tested the equator, kept moving higher. We broke the equator, and right now we're at the VWAP. And that's what's happening on Natty right now. So I would say we're probably going to be better off focusing on crude and crude oil stocks versus natural gas. But let's see. I definitely keep an eye on that VWAP, which is sitting at 2.265, call it. I definitely keep an eye on that. All right. Let's see. Questions. Gold and GDX. You know, it's interesting. If you look at this month, the month-to-date view of XME and GDX, you can see they're definitely reflecting the strength that we're seeing in gold and copper. Now, is gold in an uptrend? No, but it's been in bullish chop since April 26th. In other words, we had an uptrend. The uptrend lost its swagger, but we started moving sideways. So when we have a sideways market, the first thing that we want to do is look back at how did we get here? Was it a downtrend and then chop? Or was it an uptrend and then chop? And if it's an uptrend and then chop, that's bullish chop. So we want to focus really solely on the long side and look at oversold buys. Now, if that's the case with gold and gold is trying to move higher, it will eventually. So one has to go first. There's no chicken or the egg question here. It's either gold goes, crude goes, copper goes, and then those stocks, those sectors weighted with the companies that rely on higher prices in those commodities, then they start to move too. And GDX does look a lot like gold, doesn't it? And it should. Gold goes first, let it show the strength, and then GDX, names like Newmont Mining, GOLD. So NEM, GOLD will start looking interesting with copper, XME, Freeport, FCX, AA, Alcoa. Those would be names to notice with this surge in metals. All right, we take a look at the XLK. Yeah, AMC, let's do it this way. Let me bring over my multi-chart here. Okay. So this is, well, actually, this is going to circle back around to that high concentration weighting conversation we were having. If we're looking at XLK, this is a ETF, for those of you that may not know, and it's an ETF composed, high concentration weighting of a lot of stocks, but these are the top 11. The top 3, Microsoft, NVIDIA, and Apple, are almost 50% of the weighting of the XLK. So do Cisco and AMAT matter? Yeah, but think about the weighting, right? They're far lower weighted. Therefore, what they don't impact the market with their weighting by, they have to make significant price movements. So for Cisco to move the XLK, it's got to have a big price move because of how small its weighting is. But if you take a look at what's bullish here, we have 3 trends, Microsoft, Apple, and Adobe. And then we have a handful of bullish chop. Bullish, NVIDIA, AVGO. I would say Oracle is bullish chop. AMAT is bullish chop. CRM, Salesforce, is trying to cross into the bullish hemisphere. It has. So it's an early look at what could be bullish chop and a buyable symbol. But I don't want to be buying Qualcomm, and I don't want to be buying Cisco, and I would be very hesitant on AMD. There are better names in XLK that have better structure, that are pointing to continuation to the upside. Remember, again, it's continuation that we're after. Why do we like trends? And why do we say the trend is our friend? Because a continuation is more likely there. So that's the XLK and what I'll be focusing on for long positions. By the way, while I'm here, there are some defensive plays. I shouldn't say defensive. There are sectors in more defensive names like XLP stocks, consumer staples, that are doing pretty darn well too. Costco continues to stick with its trend. Walmart breaking out from a consolidation within the context of a trend. And for those of you that like momentum breakouts, aka a squeeze or a Darvis breakout, things like Walmart and Costco are great examples of when they compress, when they find a range, the probabilities are for continuation. And that's when things like the squeeze or any kind of compression to expansion setup works best. We have a position in Colgate off Darvis support. So that's been pretty bullish. But what do I want to avoid? I want to avoid Target. I want to avoid Mondelez right now. I want to avoid Pepsi. Right, these are names that I don't want to be in, because when I see the red candles, that's bullishness and bearishness and price action. So stick with the trends, and then your next go round of your symbols, find the ones with the green candles. Those are bullish, more likely to follow through. All right, let's jump back on over to our broader averages. All right, so let's take a look at the Dow, because a lot of questions I get is, Rog, when is the Dow going to start to participate? And we're coming into earnings season. This Friday, we're going to have really the earnings season kick off with 3 major bank names. So XLF is the number 1 weighted sector within the Dow. And if XLF can kick off earnings season pretty well, sending it higher because of things like JP Morgan, Citi, and Wells, which are all releasing on Friday, then the Dow will benefit. If crude oil continues its climb, if crude oil continues its climb, XLE should move higher. This is going to push Exxon higher, Chevron higher. We're not there yet, but these are some of the reasons when you look under the hood of the indices. Why isn't the Dow participating? XLF, XLE, XLV, IYT, XLI, some of these sectors have been far less bullish, and I do mean far less bullish than things like XLK and SMH. And so if you imagine, who saw the race this weekend? Who saw the Formula One race in Silverstone this weekend? Very cool to see Hamilton get a win before he moves over to Ferrari. That was cool. Especially, you love to see the hometown guy win at his hometown track. That was a really good race. So think about that car. Think about engines, motors, and cylinders. If the Dow is an engine, the cylinders within it are financials, tech, healthcare, energy, industrials, transports. If you take a look at the NASDAQ and the cylinders within it, this is Hamilton's Mercedes-Benz on Sunday. What's happening? XLK uptrend, SMH strong, XLC strong, and XLY surging as of really the end of Q2 to Q3. Tesla, Amazon moving higher. These are the 2 heaviest weighted stocks in what was sort of a laggy cylinder within this motor of the NAS. XLY is waking up. Amazon, Tesla are leading the way. So when we think about why one index could outperform another, it's really simple. What's in it and how's it moving? All right. So if we're looking at XLK, XLK is unique amongst the sectors, John. And thanks for asking about XLK. Or who asked me about XLK? AMC. Sorry. Good morning, John, from North Dakota. Wow. What's the weather like there? We're basically south of hell hot here in South Florida. So when we take a look at things like XLK, remember, XLK is unique because it's heavily weighted in all the indices but the Russell. So number 1 weighted sector in NASDAQ, XLK. Also in the S&P, and it's the number 2 in the Dow. So it's unique. That XLK is unique, which is to say Apple and Microsoft are really, really important. But you can see, even though Apple and Microsoft are able to keep, say, the S&P and the NASDAQ moving higher, they're not doing as much for the Dow because there's so many other sort of cylinders that are missing in that motor, and it's not able to really get going. So not everything is bullish. The S&P and the NASDAQ are, and we want to see some more sector participation within those important names in the Dow. All right. So with that said, thank you as always for being here for Charts and Coffee. We've been doing this show for, I guess, over 3 years now. And we're here Monday through Friday from 9 to 9:20, breaking down the markets, looking for where the opportunity is, looking for where the continuation and the follow through is most likely. If you want to learn more about what we're doing, how I do this, how we set up alerts and trade, come check out what we're doing over at the Sector Secrets Mastery at sectorsecrets.com. All right, gang, be good to each other. I'll see you tomorrow.